Hey, welcome back to YT Finance, and today we are talking about the top 3 best penny stocks that Cathie Wood of Ark Invest owns, which have explosive potential. We will then go over the top 3 best fintech growth stocks to buy right now, followed by a bonus stock that has a huge addressable market. I will also go over the price targets and price predictions by analysts for these stocks, as well as their fair value price, which is what these stocks should be trading at right now. Go and press the like button right now for more stock market news updates. Comment down below your favorite penny stock, turn on all subscription notifications right now to stay informed, and now let's jump right into today's stories. Now, a penny stock can have multiple meanings, from a stock that trades below $5 per share all the way to a stock that has a market cap below $1 billion. However, in this video, we will refer to a penny stock as a stock which trades below the $5 threshold. These are very speculative stocks that have huge growth potential, but the risks of loss is just as high as their growth. However, Cathie Wood of Ark Invest has gained in appreciation for the following penny stocks, which have been added to her extremely innovative ETFs. If you didn't know, Cathie Wood of Ark Invest told CNBC that Ark is working on a more speculative and aggressive ETF, which is like her regular ETFs on steroids in terms of growth. We should also remember that Cathie Wood has a 5-year time horizon on her regular ETFs, so even if they underperform for a year or two, it does not take away the tremendous growth potential that they hold, because these are industry-disrupting companies and technologies that need time to gain traction in their respected markets. Speaking of innovation, the first stock we have on our list is Nano Dimension and their NNDM stock, which you should be familiar with, but if you are not, they are a 3D printing company that produces high-performance electronic devices. Their stock went from below $1, which is when I originally called the stock out as a buy, and then it surged up to over $17, and now the stock is back in penny stock territory below $5 per share. Nano Dimension also recently announced great revenues and earnings in their most recent earnings report, along with plans to acquire more companies on top of enhancing their marketing and research and development efforts regarding their technology. Cathie Wood has repeatedly bought this penny stock to put into her Ark Next Generation ETF, ticker symbol ARKW, where she keeps almost 8 million shares worth around $36 million. And she also has NNDM stock in her Ark Autonomous Technology ETF, ticker symbol ARKQ, with around 9 million shares worth close to $43 million. The stock is currently priced at $4.90 with a 1-year price target of $10 from a single analyst. Next up, we have a favorite named Aqua Bounty Technologies, ticker symbol AQB, whose shares surged from $1.52 last February to $13.30 in January. However, similar to Nano Dimension, its shares have slid back down after their amazing surge to penny stock status. Aqua Bounty is an aquaculture company which owns sustainable fish farms which raise antibiotic-free salmon. The stock has been hit relatively hard recently due to the company announcing a stock offering which caused selling pressure. Nonetheless, Cathie Wood still adds to her position in this company, specifically in her ARKG ETF, which has around 5 million shares of AQB stock worth $15 million. This stock is currently priced at $2.50, but analysts have a price target of $12 for the stock by next year. Next up, we have Compugen, ticker symbol CGEN, and Cathie Wood allocates this company to her Ark Innovation ETF, ticker symbol ARKK. Ark owns around 5 million shares worth $24 million, and similarly to the prior two penny stocks, Compugen had a huge rally from around $4 to almost $20 before pulling back to a penny stock status. This company has shown great progress in their cancer treatments to where a huge company named Bristol Myers Squibb is helping them, and they also invested $20 million into their project. The stock currently trades for around $4.50 with a high-end price target by analysts of $28 per share. Now let's talk about some great financial technology growth stocks, but before I do, if you really want to be safe, instead of investing into 3 individual stocks, you can simply invest into the Global X Fintech ETF, ticker symbol FINX, and that's going to be safer than investing into 3 individual stocks such as Fiserv, SoFi Technologies, and Square. The reason I'm highlighting these fintech growth stocks is because according to the report by Research and Markets, the fintech space is set to grow at an amazing compounding annual growth rate of 27%, and it's set to be worth $31.5 trillion by 2026. Let's start off by talking about Fiserv, ticker symbol FISV, which is based in Wisconsin, and they offer merchant services, payment processing, as well as financial services. They have a customer base of 10,000 financial institutions on top of 6 million merchants. This is a huge company that's most known for their billing and payment services. This was also clearly evident in their Q3 earnings report, where the company brought in $4.16 billion for the quarter, which is an increase of around 10% year over year, on top of amazing net income of almost $1 billion. They also have $942 million worth of cash or cash equivalents on hand. The CEO even commented about how impressed he is with their earnings per share, which came in around $1.47 per diluted share. This company is a great stock to have in a strong portfolio, and it's not too expensive because they only trade at 15.6 times their forward earnings and 4.3 times trailing sales. Their current stock price is $98 per share, their fair value is $121, the low-end price prediction is $105, and the high-end price target by analysts is $161, which makes the company a good buy in my opinion. Next up, we have a channel favorite, which is SoFi Technologies, ticker symbol SOFI. SoFi basically offers every type of financial service that you can think of for the average customer, including multiple types of loans, mortgages, credit cards, and brokerage services. On top of that, they also acquired Golden Pacific Bancorp, which puts them on track to get a bank charter, which is going to be a gigantic catalyst. This bank charter will allow SoFi to act as a bank, which are regulated by the FDIC, but until that happens, SoFi has to abide by different regulations depending on the state that they are operating in. SoFi also had an amazing earnings report because their revenues grew by 35% year over year to $272 million for the quarter and a net loss of $30 million or negative 5 cents per share. But they also do have a strong balance sheet with cash or cash equivalents coming in at $854 million. SoFi also gained 377,000 new customers during the quarter to add to their already large customer base of 3 million members. Currently, the stock trades for around $18 per share with a fair value of $22. The low-end price prediction for SoFi stock is $16 and the high-end price target is $30 per share. But according to Morgan Stanley's analysis, one of their analysts put SoFi stock at a $25 price target. Next up, we have Square, ticker symbol SQ, which many Wall Street analysts dub as the most innovative fintech company on the market right now. Square allows sellers to accept payments by card and other means, and they also provide a plethora of other services. Square also owns Cash App, which has over 70 million active users, which is an insane number. On their last earnings report, they brought in $3.84 billion worth of revenue, which is an increase of 27% year over year. However, their net income came in rather low at only $100,000 according to this article, but they do have an astonishing $6.9 billion worth of cash or cash equivalents on hand to spend at their own discretion. Square also announced that they will acquire Afterpay, which allows customers to buy now and pay later, which will expose Square to 100,000 new merchants worldwide. I would say this stock is excellent for long-term investors. The current stock price is $213. They have a fair value of $112. The low-end price target by analysts is $190, but the high-end price prediction for the stock is $380. Now, the reason the fair value price is so low is that this stock is trading at 105 times their forward earnings, so please keep that in mind. Next up, we have Airbnb, ticker symbol ABNB. Without getting into the numbers, this company also had a great earnings report, mainly because they are disrupting the hotel industry by providing travelers a convenient and cheap alternative to staying in a hotel. This generates money for the company, which is Airbnb, and the hosts who rent out their dwellings to these travelers so they can temporarily stay in those locations and they get a cut of the earnings. Airbnb has around 4 million hosts in over 220 countries, so there are locations everywhere for everyone. Airbnb is always looking for new hosts so they can offer new locations and spots for travelers, and right now the average host makes around $9,600 per year just from renting on Airbnb. Airbnb also generated a trailing 12-month free cash flows of $1.6 billion, and they also have a very strong balance sheet of $7.9 billion worth of cash or cash equivalents with only $2.4 billion of total debt. They also have amazing growth potential because their total addressable market is worth around $3.4 trillion, which is a gigantic number. Currently, the stock trades for around $173. The fair value price is $102. The stock's low-end price target by analysts is $140, and the high-end price target is $250. But what do you think? Comment your thoughts down below, like this video right now, subscribe if you are new, and I will see you in the next YT video.